Welcome to the Sunday market breakdown. Today, breaking down the market, we start with the DXY. Looking at the DXY from a higher time frame point of view, or looking at it from the weekly time frame, looking at the candlestick. More clearly, we look at the candlestick from the daily time frame to see the overall picture. As you see where we are within the market is retesting an area of interest. We can see we have two teaser tops there. Those are neutral candlesticks. So we are neutral on the pair. So we're looking at the overall picture, doing a market breakdown to see if the market is going up or down. So looking at the lower time frame, you can see we have retested that structure there. So for price, what we're looking at from the DXY, which is the dollar index, if prices to go down, and we would have something like a continuation here, whether it's a 2-touch flag or a 3-touch flag, whichever, which is going to give us a move to the downside, we'll be looking for that. That means the dollar index will be very bearish. So for a bullish move, we'd look to break above that area there and then have continuation above that high there, that last high that it created on last week, Friday. We'll be looking for a 2-touch or a 3-touch for continuation above that area there for a move to go to the upside. That's what we'll be looking at. But mostly the dollar index, we use it to evaluate the direction of dollar related pairs. So let's look at our first pair. Looking at our first pair, you can see we have retested an area of value. That's how prices retested that, and you can see here we have a head and shoulders that is forming. So this signals a move to the downside. This is a probable move to the downside. The probability is very high that the market that reverses from there are completing the head and shoulders. So as you can see, as price, looking at price right now, you can see we have retested that inflection point with market creating a gap and then coming to retest it, breaking above in a 1-2-3 structure. That's what we're looking to have, that 1-2-3, the third touch there at the top, and then a push down and a continuation. That's what we're looking down at the lower time frame. So simple as that. We go to the EURJPY. This is the second pair on our top 6. Looking at the overall structure, we are on a high, and you can see the second last candle is bearish. So to the daily time frame, you can see it very clearly here. We are retesting an area of interest and we're forming a correction there, coming from a market that created a gap to a high. So we have an impulse down and then a correction, hopefully move to the downside. On a 4-hour time frame, looking at the market, you can see that everything is very clearly from the area of interest. We have an impulse and that correction that is forming there, which is signals a move to the downside. That's the market structure is saying. Possibly to that area below, it's going to be our next area of interest. But looking now at the market on the lower time frame, so for our entry, we'll need that correction there to complete a double touch, a mini double touch there. So we'll have a push to the downside, which is an impulse down, and we'll be looking for a tiny continuation there. We can enter directly on the 15 minutes, depending on the candlestick structure and the nature of the continuation. So you could have a continuation there, and that could be a move to the downside. So that's what we're looking for. Let's put our risk to reward ratio. Looking at that, we could have it from here. That's our stop loss. We're looking to get a registration entry to the low and then to the next area of interest. That's our first target, will be the next area of interest. So acknowledge that we are on a new high. The market just reverses from there and keep going down. So on the third pair that we're looking at, it's a little bit of a complex pair. Also reached a new high, have been bearish for the past weeks. You can see we are there. This is an area of interest where the market is, and the market corrects there. The market is correcting there on the area of interest. You see, this is a repetition that's happened on the previous pair. So looking at that correction, we analyze that correction coming from that impulse there. You see there the market. Now we're at that area of interest. Now we're neutral. Remember, at an area of interest, we're always neutral, whether the market is going to go up or down, or that impulse will be correction can move to the downside. So on a 4-hour time frame, looking at this, we have the market coming back to fill up and an inflection point there. That's our inflection point. You can see we're looking to fill up in a form of a 1, 2, 3 structure, which would be a channel. But we're not actually looking or waiting there, saying waiting for that touch. So what we're waiting for that market to actually go below that red line, that white red line that I just indicated right there. On the lower time frame, it will be very clear. So what we're looking for is for price to actually break below that red line there, and then we could have a continuation below or even through the red line. It's also very probable. We would have a 2-touch structure, or even a higher probability. The 3-touch structure will be the highest probable structure taking entry on. So that's our take on that pair. But looking at the pair itself, looking at where we are within the pair, although we are within a correction, let's go back to the high time frame. Let me show you. You can see above that structure there, that's put on our risk to reward ratio. See our risk to reward ratio. We're looking for that low there, entry towards that low there. That's where we're looking to target as our first target, to that low there. Hopefully looking for a risk entry. That would be our flag. And just indicate the flag. That would be our flag. But then that will be our reward, and we just right below there. You see our stop loss was above, but looking at this market nature, we have to be neutral because of, you can see we have this high there where the market hasn't retested, so we could possibly go up to retest that. So how we'll treat that if the market goes down to that red line there, breaks below, and then breaks back into the structure, a clear impulse. We could have a 1-hour tight flag that's analyzed on the 15 minutes to see it clearly on the 15 minutes, and we can take it on the 15 minutes. That's where we can possibly take it. Then we'll be looking for that continuation to the upside there, and that's where we can see, we can decipher that on the 15-minute time frame. That's where we can see the flag clearly. Adjusting that on the 15 minutes, what we could actually have there is a 3-touch structure, or even a 2-touch structure, but the 3-touch structure is more, it's the highest probable structure. 2-touch structure also probable depending on the area of where we are. It's also probable. So that could be our clear flag there. That could be a 15 minutes risk entry flag, so 15 minutes flash flag, and a 1-hour tight flag. So looking at our risk to reward ratio, this is how we're gonna take this trade. So that's our possible entry to the upside. The risk to reward ratio. We're looking to take it at a minimum stop loss of 10 pips. Not go trying to go below that. That'll be a risk entry from there. Looking at the risk reward, how much are we possibly getting out to get that move there? possibly looking at that as well. First target over there, so that's our first target. So that's what we're looking at. That's our first target there. You see, this could be a form of an expanding, and the market could just go to the upside, because an expanding structure is a neutral pair depending on where it is. If an expanding structure is forming on an area of interest or an area of value, especially if it's a larger expanding structure, it could be a very neutral pattern. So you have to look at it with a neutral point of view, that the market could possibly and probably do this and that. So going to the next pair, which is a dollar related pair, looking at that. So as we look at the pair itself, we are on an area of interest, and the market has showed a daily follow through. So on the daily, you can see the last 4 or 5 daily candlestick bearish, heavily bearish. You see now, still looking at the possibility of price moving up, on the probability of price breaking there, just in that hook point there, and breaking back in, giving us a move to the downside. That's the probability that we're looking at right now. We're looking at this pair, because this one is a DXY pair, meaning depending on how the DXY looks, it affects how this pair actually moves. So this is what we'd actually be looking for. Let's adjust this on the lower time frame. Good. So this is gonna be a focused structure. There you go. This could be what we're looking for. Possible 1 to 3 leg, but because it's gonna be a first leg going down, so we'll be looking at the bearish move there to the downside. So looking at that, so that would be the bearish move that we're looking for to the downside. That would be a very probable entry to get a bearish move to the downside. So looking at that market nature, comparing it and correlating it with the DXY, if the DXY behaves like this, give us an impulse and a correction here, an impulse to the downside, then we're probably to have an impulse move here and then a correction above, continuation to the upside. So if the DXY behaves in an opposite manner, would have an opposite manner, meaning if the DXY would behave in a way that they'll form here. Okay, basically that's how we correlate the two pairs. So looking at our next pair, which is a Japanese yen related pair, is a pound GBPY. So looking at this pair from a high time frame, go into the daily, we can see clearly we have a double top there, an impulse correction, and we're looking for impulse there. That's the probable move. Looking at that pair, looking at it, that continuation there, you can see from the lower time frame that the market, the price didn't actually break that high there. So what we're looking for is price to break that high before it could actually break back in and give us that tiny continuation there. Remember, that's a 1 hour continuation there. So we're gonna break it down on the 15 minutes, and it's gonna be a larger continuation on the 15 minutes. So looking at that, that'll be our 1 hour type like there. Nice like that. Let's use the risk for 2 to measure our first target and the probable percentage that we'll be getting looking at the trade. If you get a trade from there, that will be your stop loss, obviously, being aware of that area. But now, with our first target being the low of that area, that will possibly be our first target, and we can manage it from there. So now that's all from the pair. You see the pair here on the 15 minute, you see clearly that it didn't actually break there. So first just go from there, even if it didn't break, then we'll manage it accordingly. So the next pair and the last pair on our top six is a dollar correlated pair. As you see, we have a double top there. That's a double top, and we have a top there. We have a bearish consecutive bearish candlestick, weekly bearish candlestick, and on the lower time frame you can see that was an impulse move to the downside, and our price is going to retest that. So now what we're looking for, bullish move above. So how we correlate this pair is that if this DXY behaves in this way, that it gives us an impulse down, a correction, then another impulse down, that's what we'll be expecting from that dollar pair. But if the DXY behaves in this way, it goes to the upside instead of the downside, we have an impulse move and form a correction to the upside, then the GBPUSD will behave in an opposite manner, meaning we won't have this. Instead, what we actually have is an impulse, tiny impulse to break that point there and then break back in. We'll be looking for the tight leg, take the entry to the downside, we'll be looking for over there. That's the move that we'll be looking for if the DXY behaves the way it behaves. That's how it is. That will be, the target will be somewhat below, be very below that area. That's what we'll be looking to target. That's all. That's our first target. That's our next area of interest.